Hello and welcome back to Tech Latest from Nikkei Asia, where we bring you the freshest updates from the technology sector in Asia. I'm your host Akito Tanaka from Nikkei Asia's Tokyo headquarters. And Lauly Li, Nikkei Asia's tech correspondent based in Taipei, will join us for this episode. We'll discuss Taiwanese chip giant TSMC's huge expansion plan in the US and its potential risks. Welcome to this week's episode, Lauly. It's really great to have you here.
Thanks for having me here.
So you started this week's Tech Asia feature with the episode of the TSMC chairman making a big announcement with US President Donald Trump earlier this month. Please tell us about TSMC's investment plans in the US and what the company has achieved so far.
Sure. Earlier this month, TSMC chairman and CEO C.C. Wei stood alongside President Trump and announced that the company will invest another $100 billion in the U.S., which brings TSMC's planned investment in the country to $165 billion US. The number is TSMC's biggest overseas bid outside of Taiwan and is more than 10 times higher than its initial investment of $12 billion announced in 2020. And currently, TSMC's first U.S. plant in Arizona has entered volume production with some 3,000 employees there. And according to our sources, TSMC is now busy installing clean room facilities at a second plant, and the construction on the third is set to begin this year. So on top of the 3 plants I just mentioned, TSMC will build another 5 plants down the road and 1 R&D center in the U.S., which will make the country its biggest overseas hub outside of Taiwan in the long term.
I see. 165 billion is a huge number, and TSMC is building massive fabs in the US. Why is TSMC in such a rush to expand in the United States?
Indeed. Over the past 5 years, its planned investment in the U.S. has ballooned from an initial $12 billion to $40 billion by 2022, and then $65 billion last year, and then finally to $165 billion. So after TSMC's chairman Wei returned to Taiwan, he went to the presidential office and joined a press conference hosted by Taiwan's President Lai about the company's U.S. investments. He said the additional $100 billion investment is driven by customer demand, of which some 70% of TSMC's revenue is coming from American clients like NVIDIA, AMD, Intel, and Apple. But as we spoke to more than a dozen of chip industry people that involved in the U.S. investments, they all said that pressure from Washington's request for more onshoring of chip production, as well as customers' growing fear over a potential Chinese aggression on Taiwan, could disrupt global chip supplies. And that geopolitical factor also drove TSMC's decisions.
Great. We'll come back to the geopolitical factor in a minute, but let me step back a little and allow me to ask a very, very basic questions. Why is TSMC such an important player in the semiconductor industry, especially for the U.S.?
Sure. TSMC is one of the only 3 companies in the world that are capable of continue to pursue cutting-edge chip production technology. The other 2 are Intel and Samsung. It has a dominating market share in the advanced chip production. And for example, NVIDIA's most advanced AI chips are all produced by TSMC. And just a while ago, TSMC's chairman Wei said at a private gathering at a university that if there were no TSMC, the world's economy would be basically stalled. He said, and I quote, "There could be half of the new cars that could not be shipped, with TSMC building some 50% of chips for car brakes. And there could be no new generations of smartphones, no new washing machines on sale if there were no TSMC." End of the quote. And I think that's pretty much sums up the importance of the companies to the world.
So without TSMC, NVIDIA cannot make its most advanced chip, which means the generative AI market is going to be affected. And of course, we won't get the latest iPhone. And as you mentioned, even washing machines and cars going to be affected.
That's right.
And then most importantly, in your article, you mentioned that TSMC's rapid expansion in the US might be a risk to not only Taiwanese chip industry, but it could be a risk for sort of broader Taiwanese economy and society. What are these risks?
Yes. For a long time, Taiwan has taken a measure of comfort in its silicon shield. The idea that its chip economy, the second largest in the world, makes it too important for the US not to defend it should China ever invade. The Taiwanese government, general public really hold TSMC dear and describe the company as a sacred mountain that protects the country. But with TSMC expanding advanced chip production capacity in the US, many are worried such a silicon shield will weaken over time. For instance, the US now has about 11% of global market in advanced chip production as of this year, and is set to double to 22% by 2030, according to research company TrendForce estimate. While Taiwan, on the other hand, its share will drop from 71% to 58% over the same period of time. And so in Taiwan, TSMC's massive US investment has become a huge political saga, prompting officials from president to ministers to reassure the public that it will not harm Taiwan's competitiveness. However, a recent survey still revealed that there's a sharp divide in the society. About 43% people are happy about TSMC's additional huge investment in the US, but with some 43% are unhappy. So it's really a huge divide in the society over TSMC's latest decision in the US.
I see. It's very interesting. Now, how are industry analysts evaluating TSMC's current strategy?
Some market experts are slightly conservative about how quickly advanced chip making can be brought to places beyond Asia. And they said capital spending does not equal to output of viable chips in the short run. For example, Simon Wu, Asia Pacific Research Coordinator at Bank of America Global Research, he said, manufacturing yield and talents are two of the most important elements required to produce semiconductors outside of Asia. And I really like what he said. He said, Starbucks coffee tastes the same everywhere, but chip quality can vary market by market. And he also said that it's a little bit like sashimi. It tastes the best in Japan for a variety of reasons, but it's very difficult to replicate in scale in other parts of the world.
I see. Very interesting. Now, this week's Tech Asia is a sort of classic and very Nikkei Asia reporting. It's not only about tech, but it involves U.S.-China relations, involves regional geopolitical situations, and it really illustrates well. So I would really recommend our readers and listeners to take a look at it. And Lauly, are there any other Nikkei Asia tech stories you want to recommend to our readers this week?
Sure. Actually, we have another story that also involves TSMC. So according to our latest scoop, we found that TSMC and as well as Intel and chip packager ASE and SPIL, they are actually slowing their expansion pace in Japan and Southeast Asia, particularly in Malaysia. So we found that TSMC is slowing its equipment installment at its first facility in Japan, while for Intel, ASE, SPIL, they are slowing their expansion pace in Malaysia. And the reason, the major reason, that because of the sluggish demand in consumer electronics and automotive electronics. And that kind of a slowing demand, slowing global economic recovery really like pull back these chip makers' expansion pace outside of their home.
Great. Yes. And then please take a look at this scoop as well. And thank you very much, Lauly, for joining the show.
Thank you.
Thank you. And we'll speak soon. That's all for this week's episode. You can read more of Lauly's reporting along with other stories about Asia's tech industry on Nikkei Asia's website, asia.nikkei.com. Thank you for listening, and please come back to our next episode.